Bitcoin has closed yet another daily candle under the midline of the descending channel and 200 SMA. Will Bitcoin continue toward the upside, or are we going to see a short-term retracement beforehand? Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having an amazing day today. In today's video, we are focusing on the short-term price action, discussing whether or not Bitcoin will see a continuation higher through the midline of the descending channel formation and towards the 70k region, or if we're going to see a short-term correction beforehand. We will also be going over the macro charts, the technical and structural relevant levels, the Bitcoin dominance and total market cap charts, and the relevant market data and economic news. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion. Pure raw TA. If that is the kind of content you were interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you were interested in taking your trading to the next level, join us on VIP. We post trading setups with exact entries, exact stop losses, exact targets, trade justification, exclusive analysis, and so much more. The VIP channel has been operating for 39 months. You can find our entire trading track record within the pinned comment of the free channel by clicking this link over here. You can see every single month we have traded, and we can see an 81% win rate average for our total trades. If you were interested in joining, go ahead to that same message in the pinned comments and click my name to find out how you can join. Let's go ahead, guys, and jump into the video. So taking a look at Bitcoin, we've closed a second daily candle, and in 4 minutes we'll be closing a third daily candle underneath the 200 SMA, as well as the major trigger point, which is going to be the mid-level, the dotted trend line of the descending channel formation. As we approach this major bullish trigger point, we can see volatility has massively reduced as Bitcoin is more or less pushing sideways through the weekend. We are currently retesting a major short-term uptrend as represented by this diagonal trend line on the chart over here, as well as showing signs of early exhaustion as represented by a short-term bearish divergence developing. We're going to be discussing what the next likely move is for Bitcoin on the short term, the levels of which you need to be paying attention to, and how you can execute trades moving into the new week. So moving over to the market data to start on, 24-hour volume has seen a massive reduction, as we discussed, of negative 50%, sitting at 66 billion total. 24-hour liquidations not too far behind, negative 61%, sitting at only 42 million. So some of the lowest volume we have seen in the midst of what was a massive volatile week last week. And again, with this low volume, we generally don't see a whole lot of movement. With the 42 million in liquidations, 19 million have come from longs and 23 million have come from shorts. If we take a look at the price range, we have only been really moving within around a 2% price range now for about a little bit over 24 hours. We're looking around 32 hours. So again, not really that much movement. The DXY is still sitting where it closed out on the week, again yet to have opened up, sitting at 103. There are two possible directional expectations for the DXY on the short term. We are more hedging towards a retest of this uptrend, of course. If we break below this uptrend, that will be fantastically bullish for risk assets. If we bounce, we could see some more downward price action for the risk asset market. Again, watching how we open up in the new week. The S&P 500 ended up closing very good. We saw a massive wick toward the downside, again wiping trillions of dollars out of the global markets upon the last week of price action. The S&P 500 dropping a considerable around $400 on its price chart over here, from around 5,400 to around 5,100, but we have managed to close this weekly candle back above the major support at 5,300. Again, if we look historically, since the point at which we broke out of that downtrend, our prior high points that we've developed, these high points I'm writing out over here, before short-term or higher time frame pullbacks, none of which were ever broken. We established this high, we retested it. We established this high, we did not retest it. We established a high, we did not retest it. We established a high, we came down and retested it. So as we can see, if we were to break a weekly close, a weekly candle underneath this high, it will be the first time since the initiation of the uptrend that we have broken a critical structural level. That would have indicated a shift in the macro director expectations, and thus we would likely have entered a high time frame downtrend. We managed to escape that by closing above 5,300 at least for this week. So a very good close for the S&P. We are expecting directional continuations high to 6,000, provided this high is able to sustain. That is it for the broader updates. Let's go ahead and jump into Bitcoin. We're going to be taking a look at the macro charts. We're going to be discussing the short-term price action in massive detail, going over the possibilities of short-term moves and the key levels of support and resistance you should be paying attention to. We'll also be jumping over Bitcoin dominance, as Bitcoin dominance is breaking through a major level of resistance it has held for a very, very long period of time, and then wrapping up the video. So before we do get into it, go ahead and sign up using my links down below to BitUnix, BitGet, or BingX for a lifetime trading fee discount of 15%, which will save you $10,000 to $100,000+ in the lifespan of your trading endeavors. It has saved me at least 6+ figures by using those discounts. Go ahead and check them out. I'll play an ad and we'll jump back in. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and jump back into Bitcoin. So we're going to start on our daily chart, discussing the significance of the 200 SMA and the midline, the dotted trend line. We can see right as we're speaking, Bitcoin just closed another daily candle. In fact, this daily candle was closed again underneath the SMA and the mid level. You can see the SMA is crossing over through the midline, and historically the SMA, the 200 SMA particularly, is a good indication of macro strength for Bitcoin. Generally, when we are above the 200 SMA, we are in a macro uptrend, and generally when we are below it, we're in a macro downtrend. The reason I say generally is there's a lot more to identification of the trend of price action, but the SMA really is a representation of strength. So when we see the price action underneath, we are more likely to be in a downtrend, but not always the case, hence why I said generally, but we are usually quite showing signs of weakness when we are sitting below the SMA as the average of price over a period of time. So as you can see over here, the price action is struggling a little bit to get above the SMA. Now, the SMA itself isn't really a level of resistance. It is a psychological level. The critical area of resistance we are looking at over here is going to be that of the 60,000 weekly level. Again, we can draw that horizontal level across on that weekly chart, which is around about this level over here. You can see we're sitting right in that level of resistance, as well as that dash trend line. That dash trend line is going to be acting as a trigger point, a bullish trigger point, which, as we've seen in the past, when we break through this level, we do need a daily candle to close above this level. We eventually see a directional continuation to the range high prior to retesting the lower gain. So there have been instances, for example, where we do break above this level when we don't see the range high retest, but we generally retest the range high eventually again before retesting the range low. So we can say with a higher degree of certainty, a daily close specifically above the midline of resistance increases the likelihood for a directional continuation toward the range high, just as we told you over here, and we ended up seeing, just as we told you over here, and we ended up seeing, then not. So we are watching for that breakout before we expect a bullish bullish continuation. That does mean Bitcoin is at an area of resistance, and resistance is resistance until it is not. So we do need to discuss the possibility of a correction, where a correction could theoretically take Bitcoin, and what significance will this correction have if it were to develop. And I mean, if it were to develop, if we were to see a breakdown prior to breaking above the midline. Because remember, if we break above the midline, the downward expectation is no more. We then expect this bullish continuation to occur, and we expect the short term to continue upwards, and the downside risk becomes much less probable than it is while we remain underneath the midline, hence it being a trigger point. So let's jump over to the short term and discuss. We'll come back to the macro chart in just a moment. As we can see over here, this is going to be the short term price action. We have got our 200 SMA and midline of our channel represented by this horizontal level. Now, of course, it is actually more or less a diagonal level. It runs, wrong thing. It is a diagonal level. It runs through this region. But again, we're just going to be using this horizontal region to mark it out while we're on that 2-hour chart. It is sitting around about the 62.5 to 63.2 region, this horizontal resistance. Furthermore, we can see this uptrend that we have been in since the 5th of August, which is about a 28% rally toward the upside, is going to be initiated from the bounce of the $49,000 region. So this diagonal trend line represents the uptrend Bitcoin has been traveling within since the bounce of 49,000, since that massive liquidity wick below the descending channel formation. I do have to remind you, while we remain in a descending channel formation, the only thing that would invalidate this channel is going to be a daily candle close below or above the range low or range high, as if we look historically, we have not seen a daily candle close above or below, and therefore, if we were to see a daily candle close above or below, it would be an outlier of what we have seen occur in the last 5 months, and therefore it would be a large indicator that that will be the initiation point of a directional continuation in the direction of which the candle closed. You can see even on this instance, we managed to close a daily candle above the trend line, showing just how relevant and important this downtrending diagonal resistance, this descending channel formation is. So let's jump over to the short term. As we can see, Bitcoin is in a bit of an interesting position. And when we jump into the weekend price action, we see volatility reduce. We see volume reduce. We see everything kind of weaken. It's normal that we generally see a bit of weakness moving into the weekend. Sometimes we do see a fair amount of volatility as there is less volume in the market. It's easier for the market to move volatile in each direction as large players kind of push the market around a little bit. In this instance, we've more or less seen the price action push sideways. With the sideways price action, we are seeing some indications of exhaustion. Again, that is going to be a normal expression of falling volume and volatility, which again is an expression of momentum, which our RSI represents. And we can see the RSI has been moving downwards slightly, while the price action has been slightly moving upwards. This is a classic bearish divergence, indication of a bearish divergence, which is showing us we have a degree of exhaustion occurring at our area of resistance, which is totally normal. So let's talk about our structural levels. What we can see over here is we have got our uptrending diagonal resistance. While Bitcoin is above the uptrending diagonal resistance, we are technically, by definition, in a uptrend. The uptrend is expected to continue until two things occur. Number one, we meet a level of resistance in which the sellers take over in comparison to the buyers, and we see a reversal in the price action. Or number two, the exact uptrend of which we have been traveling along cracks toward the downside and the price is able to sustain below the uptrend, initiating the start of a downtrend. Those are the 2 points of which a uptrend eventually comes to an end. As we can see over here, we are retesting that uptrending diagonal trend line as we speak. Not only are we retesting it, we can see that we are in that period of exhaustion as per our momentum. So here are two scenarios we'll go ahead and explain to you. Scenario number one, the RSI is able to break above our downtrend and thus invalidate the exhaustion developing, which is a representation of our bearish divergence, likely facilitating a bounce from our short-term uptrend, resulting in a continuation into and possibly through our 200 SMA and dotted trend line. As you know, we would need a daily candle to close above this level to then validate a continuation higher. That is going to be the bullish case scenario. There is only one bullish case scenario, and that is it. The bearish case scenario is that Bitcoin fails to sustain above the uptrending diagonal trend line as represented by our uptrend, and does not flip momentum back positive, in fact rejecting once more. A rejection once more from our RSI as well as a breakdown of our uptrend will tell us that the uptrend is over and Bitcoin is likely to move towards its next level of support. Where are our levels of support? We are looking at that 58k level right over here. Again, our horizontal level, we are looking for a correction into 58. These levels are acting as critical bouncing points. So if we do retest this level, a reversal could very well develop from that region. Our next area of support is going to be 54k, and 54k is a very special area of support because the 54k level marks the descending support line of the descending channel. This is our 54k region, and therefore, if we were to lose 54k, we would be breaking underneath the descending channel formation yet again. I do not believe this to be a likely scenario, and therefore if we were to see a correction, I would expect the price to reverse prior to reaching 54k, and thus 58k would be the nearest support and the most likely area for reversal. So here are the two scenarios. Number one, we fail to sustain above the RSI trend line. We fail to sustain above the uptrend of the diagonal trend line. We then see a short-term correction to 58k, where we will be looking for reversals to develop in the price action. This is the most likely reversal area for Bitcoin if it were to be reached, and we would then expect a directional continuation upwards and likely through the 63 and dotted trend line level. The reason we say that is because the descending channel formation, until invalidated, is a bullish structure, and thus a directional break toward the upside is the expectation while this structure remains. Only an invalidation of the range low would invalidate the structure, and thus we would have to break a daily close below 54k to invalidate the directional expectation upwards and thus see a directional continuation downwards. For that to occur, again 54k would have to be lost. That is the bearish scenario. The bullish scenario is that Bitcoin is able to reclaim the RSI downtrend in the short term, extinguishing the negative momentum that has been developing. It is able to break through this short-term uptrend and thus see a directional continuation into our 63 resistance to retest this midline level. That will be the bullish case scenario on the short term, and for us to then expect directional continuations higher from there, we would need a daily candle close, which we'll be discussing in tomorrow's video, above this dotted trend line. Those are the short-term levels that you should be paying attention to. That is how we're navigating the next 24 hours of price action, and those are the levels we are watching. So that is it for Bitcoin. Let's jump over to Bitcoin dominance. Bitcoin dominance is doing something we haven't seen actually for a very long time, and that is breaking through its 2019 to 2021 low points. Massive breakout here, Bitcoin dominance. I don't think many people expected it. For me personally, I didn't think Bitcoin dominance was going to break out, so it is quite a shock to see Bitcoin dominance breaking out. But in context of what is happening, this macro descending channel, we didn't expect this channel to be going for 5-6 months either. So with context of the descending channel formation and the total cryptocurrency market cap decreasing in value over the time of 5 months, it is normal that Bitcoin dominance is going to gain. And we talked about this in the last video. If we look at when Bitcoin started its channel back in, late Feb, and where Bitcoin dominance was at the time, we're looking around, 52.5%, and we're looking at it where it is now, 58%, but Bitcoin is still in that same descending channel. Altcoins have really been obliterated, right? We've seen a 6% rise in Bitcoin dominance, or about a 6% rise in Bitcoin dominance, while Bitcoin is more or less at the same price it was when we entered the bloody channel. Look at this. Same price, the $60,000 region when we entered, we're at exactly the same price, yet Bitcoin dominance is like 6% higher. So altcoins really have had the short end of the stick this cycle, and until Bitcoin dominance is able to really drop back downwards and crack below this uptrend, we're unlikely to see a parabolic altcoin season. So if you're waiting out for the altcoin season, if you're looking to reinvest in altcoins, it might be wise to wait for Bitcoin dominance to really start to tank a little bit before you really jump on in. Remember, you're never really too early, you're never really too late. It's about the decisions you make at any particular time. You could be early and make poor decisions and come out with nothing. You can be late and make good decisions and come out with more money than the people who were early. Again, it's more about your decisions at any particular moment that make or break you as a trader than anything else. Your decisions are the most important things. The way you manage your active positions, when you take your profits, when you take your stop losses, those are really the crucial factors when we're looking at your overall profitability as a trader. So don't feel like you need to jump in just because you think something's going to happen. Don't rush into your decisions. Be slow, be patient, be calm, be collective, and be, of course, fact-driven when you're making your decisions rather than emotional. Thanks for tuning in, guys. Have a fantastic day. We'll catch you guys in tomorrow's video. See you then.